Hey everyone, welcome back to Corporate Decoder, the place where we translate corporate jargon into plain English. And let me tell you, this latest filing from Cycurion is a bit of a spicy one, hinting at some big strategic moves that could shake things up. So what exactly are we looking at here? Well, this is a Form 8K filing, which basically means something important just happened with the company and they need to tell the US Securities and Exchange Commission right away. Think of it as a quarterly checkup, but for major events, not just routine financial updates. Cycurion is a publicly traded company, and today we are decoding a filing from very recently, a report that tells us about a significant agreement they've entered into with another company called IQSTL Inc., or IQSTL for short. Before we get into the nitty-gritty of this deal, let's quickly touch on what Cycurion actually does. They are involved in common stock and redeemable warrants trading on the Nasdaq under the ticker symbol CYCU. This tells us they are in the business of issuing and managing these financial instruments, typical for many growth-oriented companies. Now, the core of this report is this stock-for-stock exchange agreement signed on September 2nd of 2025. This isn't just a minor partnership, it's a deal where both Cycurion and IQSTL are agreeing to exchange a significant amount of their own stock. Specifically, they're each set to issue $1 million worth of their common stock to the other company's stock at the time of the exchange. But here's where it gets really interesting. It's not just a direct swap between the companies. They plan to pass on a portion of these newly acquired shares to their own shareholders as stock dividends. So IQSTL shareholders might end up getting some Cycurion stock, and Cycurion shareholders could receive IQSTL stock. This is a way to boost shareholder value and potentially increase the visibility of both companies among a wider investor base. It's a bit like saying, we're giving you a piece of our partner. On top of this major agreement, there's also an announcement that suggests Cycurion is actively looking to get its name out there. On September 2nd, the company released news that it would be presenting its corporate overview at the ATSI, Wainwright 27th Annual Global Investment Conference. This is a pretty big deal in the investment world, giving companies a platform to showcase their strategy and potential to a lot of sophisticated investors and analysts. It signals a proactive approach to investor relations and perhaps a push to attract new capital or partnerships. The very next day, September 3rd, they followed up with another press release specifically about the stock exchange agreement we just discussed. This dual announcement strategy likely aims to maximize the impact and ensure that the market is well aware of these developments. Now, the actual agreement itself is filed as Exhibit 10.1. While the filing gives us a summary, it explicitly states that this description is not complete and is qualified by the full agreement. This means that if you're a serious investor, you'd want to dive into that detailed document to understand all the nooks and crannies of the deal. Here's another important detail. Cycurion has checked the box, indicating it is an emerging growth company. This status comes with certain regulatory benefits, like being able to delay adopting new accounting standards. It signals that they are a relatively young or smaller company in the eyes of the SEC, aiming to grow and potentially compete with larger players without being immediately burdened by the same extensive reporting requirements. Okay, so let's zoom out a bit and think about what this all means. This stock-for-stock exchange with IQSTL is a pretty bold move. On one hand, it could be a fantastic way for both companies to expand their shareholder base and gain new investors who might not have discovered them otherwise. Sharing each other's stock acts like a mutual endorsement and can increase liquidity and visibility. It also could be a strategic alliance working together on future projects or market strategies. On the other hand, there are always risks with such agreements. The value of the stock received depends heavily on the future performance of the other company. If IQSTL's stock price tanks, the value of the Cycurion shares received by IQSTL shareholders will also go down, and vice versa. It also means that both companies are now more closely tied to each other's fortunes. A problem for one could easily become a problem for the other. The fact that they are presenting at a major investment conference right after announcing this deal suggests they are really trying to capitalize on this momentum. They want investors to hear about this growth strategy and see the potential for future gains. A successful presentation could attract more attention, leading to partnerships or investments that could further accelerate their growth. From a Warren Buffett perspective, you'd want to be asking, what is the underlying value of these companies? What are their competitive advantages? What are their competitive advantages? What are their competitive advantages? What are their management teams truly capable of this deal? Is more about market perception and strategic positioning than immediate financial results derived from the exchange itself. The real financial impact will come from how this alliance translates into actual business growth, increased revenue, and profitability down the line? Are they sharing stock because their own operations are struggling and they need to create perceived value? Or is this a calculated move to unlock synergistic growth? We need to see how both companies perform after this. Looking at the filings, we don't have detailed financial tables in this particular 8K report, which is common for this type of current report focused on events. However, the context provided by the company's trading symbols and its status as an emerging growth company tells us they are likely in a growth phase, possibly reinvesting heavily in their business rather than focusing on immediate profits. The key numbers to watch in future filings will be revenue, growth, fussability, and how well they manage their cash burn. My take on this is that Cycurion is making a strategic play for increased market presence and investor engagement. The partnership with IQS Teal and the conference presentation are clear signals of a company that is actively seeking to elevate its profile and attract both business and investment opportunities. It's an exciting, albeit potentially risky strategy. The success of this venture will hinge on execution and the ability of both companies to genuinely collaborate and deliver value to their respective shareholders. Beyond the mere exchange of stock, we'll need to keep a close eye on their future reports to see if this bold move pays off. What do you all think about this stock-for-stock exchange between Cycurion and IQS Teal? Let me know your thoughts in the comments below. If you found this breakdown helpful, please hit that like button and consider subscribing for more in-depth corporate analysis. Also join our Discord community linked in the description for even more discussions. Thanks for watching, and I'll see you in the next video.